Brokers Alliance and the National Insurance Clearinghouse present the Business Insurance Zone, a Bravo video event. Broadcasting in HD 1080p on Vimeo, YouTube, the Insurance Newsnet, Agent Navigator, BrokersAlliance.com, and on Facebook, LinkedIn, Twitter, and the Insurance Forum. And now your host, the whiz of the biz, Steve Savant. Well, welcome everyone to the Business Insurance Zone, the talk show that spotlights insurance in your practice, keeps you up to speed on insurance news and products, features insurance strategies from top advisors. Get in the zone, the Business Insurance Zone. Our email address is thebiz@brokersalliance.com, where you can also call us at 1-800-290-7226, extension 147. For any of your quotes or questions on life insurance, long-term care, disability, annuities, and of course our group pension plans. And just to remind everyone, I'm not an attorney, I'm not a CPA, not your legal advisor, so before moving forward with any of the planning strategies that you hear, always make sure that you check in with your CPA or attorney, or if you're the broker-dealer, make sure you talk to your compliance officer. Well, today we're talking about not only long-term care specifically, again, but we are talking about corporate or business long-term care. And with me, of course, is my guest, the head of our division for long-term care at Brokers Alliance, Susan Carlson. Welcome, Susan.
Thank you.
Anytime you listen to this show and you say, oh, my, I want to talk to that gal, you can call her at 1-800-290-7226, her extension 140, or just write her at susan.carlson@brokersalliance.com. Well, Susan, we've been talking at other shows. We've been talking about different ideas of long-term care. Today we're going to talk about the business or corporate aspect of it. I know you've taught on this. And of course, where we do our educational formats, and some of that is deployed through Agent Navigator on our site, other sites that we have. And I was really amazed at, well, there's a lot of issues. I know that we don't want to lead with tax deductions, right, but there's some nice perks here. Absolutely. From a tax point of view. Let's open it up. And usually when I think of long-term care, I hate to say this because I feel it shows my ignorance, but I always think of it as an individual sale. I just don't think in the corporate sense, and I think I'm not the only one that thinks that way.
Correct.
So how do I understand this? Because I want to integrate long-term care into my practice. Okay. I want to integrate it and make sure I'm doing my full Monty when I'm doing full-blown estate planning, talking about LTC, full-blown retirement planning, talking about LTC. Now I'm talking about business planning with LTC.
Absolutely.
Well, give us a little introduction and get our toe wet in the water here.
Sure. Long-term care is treated like health insurance for income tax purposes. So if I have a long-term care policy that's paid through a business, not only are those premiums 100% deductible as a normal business expense, but the income or the premiums are not included in the employee's income. The benefits I receive are income tax free. So it's just like health insurance, not like DI where if I take a deduction up front, it's taxed on the end. But the bonus with long-term care is that I can discriminate on a class basis. And all the insurance companies have tax guides that you can actually give to both the business owner and their CPA so they're aware that they can discriminate in how this works. But in conducting long-term care planning, we can also take it within a business and pay with discounted dollars. So when we're doing our estate planning, we know whether or not our clients own a business. And here's a way that we can approach them about including long-term care, how important it is. And gee, by the way, we might be able to carve out a couple of your key executives, and instead of giving them some type of cash bonus at the end of this year, we're going to buy a long-term care policy for both them and their spouse. So a lot of the advanced planning type of verbiage and ideas that we're using for life insurance, we can incorporate long-term care insurance.
Now, this I'm imagining from a deductibility point of view, this is huge for C Corps.
And that's where the strongest advantages are with the C Corp across the board, regardless of who's buying the policy. It's 100% write-off. For every other business or every other non-C corporation, if I buy the long-term care insurance for my rank and file, it's 100% write-off. But if I'm buying it for myself as the business owner or a majority stockholder, then there's just some limits of what I can write off.
So we have to look at, is it a C Corp or is it one of the S Corp, LLC, whatever the partnership issues?
Sole proprietor.
Yeah. So when I'm looking at some of these deductions, I mean, are they big? They can write the whole thing off if it's a C Corp, right?
Correct. And
I'm not under ERISA. If I understood you, there's no ERISA issues here.
There's no ERISA. You can discriminate on a class basis, which is salary, tenure, or title. And depending on your age, for a 65-year-old, anyone really between the ages of 61 and 70, they can write off $3,300 of their long-term care premium, which tends to be less than what the long-term care premium is.
Now, this is the corporate write-off or the individual write-off?
This, if it's within a non-C, then actually, it would flow through as income, the premium does, and then the individual writes it off on their K-1.
So they could do that even if you're not a C, you're just an S, LLC, or a partnership.
Absolutely, which a majority of our businesses are.
In those areas. So in the C Corp, I can get the whole thing, write the whole thing off. In this area, I have certain guidelines I have to go through.
Just if you're the owner or a majority stockholder.
But if you're a key person, that's no problem.
Absolutely.
Oh, well, that's great. Now, I like the idea of LTC as another, it could be a benefit package. It could be a protective tactic for the owner for his ultimate estate plan. I mean, he could incorporate a lot of these small businesses, their businesses are the vast majority of their estate. So I might as well get the deduction. I might as well protect my family so that I don't have to indemnify against long-term care costs so I don't have to deplete or go dip into my business to do it.
Right.
I mean, there's a lot of cool reasons to do that. Talk a little bit about, so we got deductions depending upon the entity and how it's formed.
Okay.
And then we're also looking at, have you ever seen this? I mean, people do group. I mean, we do group DI, now we're doing group LTC. Who are the players in corporate group?
When if you're looking for true group, which means very, very large organizations, there's only 3 carriers that I'm aware of, and those are Genworth, Prudential, and Unum. Now, most of our business does not fall under the true group umbrella. What we're looking at are what we call worksite products, which is an individual policy with possible underwriting concession and possible premium discounts. That's what a majority of the group business is. And almost all of your carriers have something, whether it just be a 5% discount, whether it be a short application. It depends on how many people are participating, who's paying, things of that nature. So it's good to get a feel of what the business owner wants to do. Then go to your BGA, let them know, and then they'll tell you, okay, this might be a fit for Prudential because of this,
Of course, you're talking about us as the BGA.
Absolutely, Brokers
Yes,
Alliance.
So, I just want to make sure we're sponsored by our company and they foot our bills, so I thought I might want to mention it. Okay. And remember, you can call them at 1-800-290-7226. And if you want to talk to Susan direct, her extension is 140, and her address, susan.carlson@brokersalliance.com.
Absolutely.
When I'm thinking of corporate business owners, I'm wondering, how can I approach them? Because I love the deductibility issue if I know what's going on going in, if it's a C Corp versus a non-C, which is, as partnership, maybe LLC. But I also like the ability to kind of give an extra added perk maybe for my rainmakers. I can be discriminatory, people that are knocking it out of the park for my company. I want to be able to say, I want to put myself on this and a few of my other employees, so that makes it look like I'm not just doing it for feathering my own cap, so to speak.
Correct.
When I look at long-term care from a business owner, I keep thinking, well, I'm just going to be, I don't need this when I'm younger, but you always say, but you do.
Long-term care can happen to any of us at any time. It's not for old people, and it's not about nursing homes. It could be caused by a car accident, a disability, and it happens at home. And when it does happen at home, how's that going to affect the key executive's family and also the productivity of the key executive? And more importantly, is we're seeing so many limitations coming down for highly compensated employees. I mean, what other benefits are left out there? Well, long-term care doesn't fall under those limitations. So here's an additional benefit that I can give you because I'm having to take away. And
the corporation's deducting it. But now if I take constructive receipt of the benefit of that as a key exec, do I pay taxes on those benefits?
No, it's just like health insurance.
So really, this is pretty good because even disability, which is a little different, I could deduct the premiums from DI, but then my employee is going to have to pay the taxable event on this. But in this case, this benefit is actually deductible at the C Corp level, and then again, there's different laws and regulations for the other entities. But then my employee or my key exec, if he takes constructive receipt of these benefits, I don't have to pay tax.
Exactly.
So what are some of the other things we look at when we talk about business or corporate LTC?
Well, we look at what I like about it, though, is the fact that we can customize. So I might, let's take a law firm is a really good example. So I might approach all the partners of a law firm and say, okay, here's an additional benefit that you can pay through the law firm. And most law firms treat their benefits as an S corporation. So for all the partners, you can write off a good chunk of your long-term care premium. We can also include your spouses as well, and you can take a write-off. And then for everyone else, we might make it a voluntary plan. Just offer it up. Say, hey, we have this policy. If you're interested, we can offer it to you, your parents, the retirees. But what I like about it is just the fact that I can customize it. So for this group of people, I might have this type of a plan with a 10-year premium pay. For this group of people, I might have a lifetime pay. So you're really able to go in there and customize, and you don't have to be a group producer per se.
I've noticed with, again, a little more familiar for myself with disability.
Okay.
I noticed that I might have a group disability, short-term group disability, and then if my employer wants to give, to put on an additional benefit, I get my individual one. Do they have such a thing in LTC, long-term care?
They do. A lot of times, and this you'll see this on the true group side or for larger groups, where the employer might go in and offer a very small base plan. And a lot of times why they're doing that is for the underwriting concession. So they'll offer a very minimal policy with minimal benefits, but allow the employee to buy up per se. It's a good market, but really where I see the opportunity is with your carve-outs. Your top dollar, your benefit-rich policies, because you're dealing with executives. I think that's the market to go after.
Well, when I think about having this kind of floor minimum LTC to get the underwriting privilege, and then buying individual on top of it, I think that's the way to do it, because we've been doing that with DI all this time.
Absolutely.
Well, listen, coming up, we're going to continue in our next segment on this whole issue of corporate and business LTC with Susan Carlson, our head of our LTC for Brokers Alliance. You can write us at thebiz@brokersalliance.com. Call us 1-800-290-7226. My extension 147. Susan's is 140. Our site, www.brokersalliance.com. You're listening to the Business Insurance Zone, the talk show that focuses on insurance in your practice. We'll be right back after the break.
Steve Savant here. For years I've heard that less than 2% of all term life insurance ends in a claim. That's not many, and clients had to die to receive the benefits. That's the old term insurance. Now start selling the new term insurance. The term insurance that covers your client through a chronic illness, a catastrophic event, or a terminal diagnosis, and pays their monthly premium during extended